Good morning, trading world. It is December 2nd, 2022, and this is my pre-market outlook and technical analysis for day trading the markets. I'm going to rush and try to get through this so that I can get it out before 8:30, the jobs number, which is the thing today. Even if you had the job numbers in your hand right now, could you pick a direction? For some time now, good news has been bad news and bad news has been good news, and to the point, even if you had the job numbers in your hand right now, you still couldn't pick a direction. So why put a lot of money at risk here? We're at a place in the market where technicals are very confusing, because when larger time frames are fighting for control, you can literally get your account ate up in the crossfire. Here, I like to watch extremes like the major channels, 412 through 416 on the top side and 400 through 397 on the bottom side. If you have positions on before the jobs number, make sure you can withstand max loss on that position. At 414 to 416, I will like to try a short position or put a short position on, but not a full position. Hopefully this happens at the end of the trading day. I may be willing to take a small long intraday in the 400 to 397 area, but will step very lightly and careful, because we could be setting up for a repeat of December 2018, where the Santa Claus rally didn't come until Santa Claus himself came. I do have that queued up. So as you can see here, back in 2018, right around December 3rd, we popped a high before really just losing it, and we didn't come out of it until Santa Claus himself delivered us out of it. Now, it is possible, but for some reason I'm a little I just want to have that in my peripheral to be careful, to know that this is how things could turn out. So yes, I would be willing to put up a short position if we hit a high here today, preferably at the end of the day. But I'm still not willing to really stand on anything right now and go out with a lot of putting a lot of money on the line and risking things. So that's my diatribe for the morning. So let's get to the key levels to watch for today. All right, and here we are back with the key levels of the day. Starting on the resistance side, we have our Jack resistance at 407 to the 408 area, Queen resistance at 409 to the 410 area, King resistance at 411 to the 416 area. On the support side, we have Jack support at 406 to the 405 area, Queen support 404 to the 403 area, and King support 402 to the 399 area. The main thesis is ever so slightly bullish, closing above the 407.38 with a projected target high of between 407 and 414. Alternate thesis is bearish, closing below the 407.38 with a projected target low of between 406 and 397. The current major channel we are in is 397 all the way up to 416. Don't be surprised if we somehow today or Monday tap that 416. The major channel above that is 416 up to 425. We do have dissonance between the technical side, which is bearish, and the quant side, which is more like 50-50, but bullish by a penny. We still have a gap in order flow below us. I feel that somehow we feel the gap in order flow below, giving us the rest of the pullback I was looking for. But once that gap is filled, who knows from there? But if I must guess, possibly a bull move after the pullback. That brings us into the scenarios of the day. Let me bring those up. All right, the first scenario that I have up is going to be our expanded range day structure. This is our most probable excuse me, scenario today. We're going to get likely a huge pop, drop, and then continuation of that drop from the jobs number. Likely. And then we level out, consolidate, and then get a big bull move all the way into the close. So this is our expanded range day structure. Scenario number 2 is our rounded reversal day type structure. We could get a drop, pop, and then come back down, continue that down move through the cash open, and get that continued push lower toward the jack or queen support area. Find that midday chop around either the queen or king support area before going back up with the same energy of force we went down with the first part of the day. That is our rounded reversal day type structure. Alright, forgive me, I'm rushing trying to get this out before the jobs number, but our last scenario is our trend day down. We open, gap down, start with somewhat of a rally back toward the previous close, and then reverse and continue that downtrend. And this could get pretty unusual because we could kind of get like a two-part trend day where we stretch the downtrend through the day-to-day, and then the rally back up or the midday chop or rally could stretch all the way into Monday. So it could be very unusual as far as the trend day. Again, I always close the video out. Please know and understand your risks, because this is your most important job as a trader, protecting the capital that you already have. And once you know and understand that risk, we manage that risk in accordance to your account size. I hope this helps, and please be careful because it is dangerous when the higher time frames are fighting for control. Don't get caught in the crossfire. Go out. Hopefully this helps and you have a positive trading day. Go out, make it a great one.